Welcome back to the Crypto's Key Conversation. We're going to quickly jump into CoinGecko here. We're currently sitting at a $1.83 trillion market cap, currently down 4.2% for the day. And as you can see here, Bitcoin sitting at 39,416. And just over the past couple of days, just yesterday with the Biden executive order update that came out, we had a spike. If we come over here and look at this chart here, we were at a 37,000, almost 400, and we spiked all the way up to almost 42,500. And obviously, as of today, we're down 4.2%, and that's due to a lot of variables. One of them being the CPI data has come out. It says inflation rose 7.9% in February as food and energy costs pushes prices to highest in more than 40 years. So obviously that's going to cause some turmoil and some negative outcomes within the market. And as you can see, we have Bitcoin at 39,415, Ethereum 2,611, Tether, BNB 371, Terra sitting at $99, which Terra just flipped XRP. So look, good for all the Terra investors. XRP sitting at 74 cents, Solana sitting at $83. Cardano sitting at 81 cents, Avalanche sitting at $74. So coming over here to the Bitcoin Fear and Greed Index. So just like I told you yesterday, I was anticipating us kind of spiking up outside of, we were at a 22. I figured we would have a spike up, especially after the positivity that came after the executive order update. So as you can see, we're sitting in this fear range now at 28. And when this thing updates in an hour and 17 minutes, I definitely can see this coming down, especially based off of kind of, the data that's come out and, us seeing a little bit of blood within our market. So I just kind of quickly wanted to update on kind of what's going on. So the key points of this article from CNBC on this inflation rise to 7.9%, it says the consumer price index for February rose 7.9% from a year ago, the highest level since January 1982, which in that range, it was about like over 14%. So there's people that's been claiming we're higher than this, but this is kind of the data we have right now. Also, they said excluding food and energy, both of which moved sharply higher during the month, core inflation still rose 6.4% in line with expectation, but the highest since August 1982. Gas, groceries, and shelter were the biggest contributors to CPI gain, and auto price eased. So as for gas, I mean, I just recently went to Costco the other day, and there was a line to get in line, to get in the line for the pump. I mean, there were so many people there trying to get gas, and it was like $5.10 for a gallon of gas. So obviously that's going up, especially with the Russia-Ukraine stuff. You have the sanctions going on Russia. There's so many variables and narratives that's going on that's affecting our markets. And lastly, here it says workers' paychecks fell further behind as inflation adjusted earnings dropped 0.8% in February, contributing to a 2.6 decline over the past year. So obviously that's why we're seeing our market kind of down right now. So especially with the it was an FOMC meeting coming up, the Fed meeting with Jerome Powell and the Fed, and how they're going to combat inflation, whether they're going to be super hawkish, a little hawkish, or, a little bit more dovish. We don't know. Obviously, we're anticipating some sort of interest rate hike, whether it's 25 basis points or whatever the case is. So that meeting is going to be next week. So there's going to be a lot of volatility until then, until we see what happens. So continuing on here, I wanted to cover John Deaton's tweet here. He says, just finished my interview with Jeremy Kaufman of the LBRY. So obviously the SEC versus LBRY case is going on, and LBRY is under the scrutiny of the SEC, just like Ripple. So he says, I promise you that you will become even more outraged by the SEC. If the SEC's theory in LBRY case is successful, not only is ETH a security, but BTC or Bitcoin miners could be considered securities. That's nuts. So then he continues down here, says the SEC is claiming if a company owns a token while actively improving or upgrading the platform or the way the token is utilized, and you sell that token, it is a security. Software is consistently being upgraded. Bitcoin miners perform upgrades. What about ETH 2.0? It's crazy. So remember ETH 2.0, because we're going to kind of cover something quickly coming up here soon. I just wanted to touch on what LBRY says here. It says, thank you, John. Let's all work to keep cryptocurrency free and legal in the United States. So obviously, yeah, we're all on the same team. Doesn't matter what crypto project, what digital asset, which token you hold, or which company you back. We're all on the same team. So we need to make sure that, we keep, our digital assets and our blockchain companies and projects on the right side of the law, on the right side of history, so this space can flourish. And then JV asked, when can we expect to see the video or the interview? And he says in a couple of days. So I'm highly anticipating when this interview comes out, because I'm going to cover it on the channel. But remember this ETH 2.0 deal says software is constantly being upgraded. Bitcoin miners performing upgrades. What about ETH 2.0? It's crazy. So coming over here, just there's an article from Cointelegraph that says Ethereum's consensus layer contract hits 10 million ETH stake. The migration to the proof of stake consensus appears to be progressing well by all numerical accounts, potentially signifying an anticipatory demand for the network's long-awaited upgrade. So obviously they're got smooth selling without the overbearing, friction from the SEC. And obviously we know this consensus layer, formerly known as E 2.0, that comes with this whole scandal we're talking about with the Ethereum free pass and security laws and regulations in regards of whether obviously we know ETH back in its ICO phase in the relation to how the SEC uses the Howey test, that was considered a security. Now they're saying today's Ethereum is a security, which I agree it's not a security, but now you're going to ETH 2.0, or now known as consensus layer, but it's not a security. But you're claiming today's XRP and past XRP and the XRP sold on secondary market are securities. There's so much confusion, and then just like I covered, you have a library going under the same scrutiny. So I'm curious to see how this interview went, and I'm going to definitely cover it. But there's a lot of shady behavior going on with the SEC and their overbearing regulation by enforcement. And I wanted to cover this video here with Brad Garlinghouse. It says because obviously with the executive order update and Biden and the impact it had on the markets and kind of how people are seeing it. Brad Garlinghouse had a great position on how he viewed things. So it says Biden's crypto order could end fragmented U.S. regulation, says Ripple CEO Brad Garlinghouse on CBC Crypto World. So let's take a listen into this.
Joining me now, Brad Garlinghouse, CEO of Ripple. Brad, thank you so much for being here. It's great to see you.
Good to see you too, Kate. Thanks for having me.
Of course, it's a big week for crypto with this executive order. What does this mean for the industry? And what's the big takeaway for you?
Look, I think this has been a very positive event. And frankly, we had heard, as I'm sure you had, a lot of rumors about an upcoming executive order. And I think this exceeded my expectations of what we could have even hoped for. Because look, the first step to solving a problem is acknowledging you have one. And for me, the executive order is really calling out something we've been saying for years, that one, this is a massive industry. It's not going away. We have tens of millions of U.S. citizens participating in various ways, which is awesome. But it also is calling out that, look, we have had a fragmented and siloed approach to regulation here in the United States. And that is impacting the United States leadership in this very critical, very rapidly growing industry. So I thought it was a very positive evolution, and I'm hopeful that it'll catalyze some solutions that we haven't seen yet.
And that seemed to be one of the big themes, competitiveness and the U.S. not wanting to fall behind on being on really the forefront of innovation. Do you think that played into it, the U.S. feeling like it might be falling behind?
I think it's clear it had a big impact in why the executive order was written. I think what we have seen really, and you kind of see, particularly the talk about silos, you kind of see to some degree the executive branch saying, hey, this SEC, the Securities Exchange Commission, can't take singularly the lead because it has to think holistically. Every time the SEC is mentioned in the executive order, it's alongside the CFTC as well as the CFPB. And I think we have seen here in the United States, things have been withheld. Sorry, they've been moving more slowly. And as to your question, outside the United States, in countries like Japan, in Singapore, in the UK, in Switzerland, even in the UAE, you're seeing entrepreneurs and investors able to pursue opportunities in crypto and blockchain without that uncertainty, because the regulatory clarity has been there. Something Ripple has been calling for from well beyond even the recent lawsuit with the SEC.
So you mentioned the SEC. I got to ask you about the SEC versus Ripple case. What can you tell us about that at this point? What's the latest, and has there been any progress when it comes to that lawsuit?
Well, it's been almost not quite a year and a half since the SEC sued Ripple, sued myself, sued Chris Larson, and we are moving as expeditiously as we can. It has certainly been frustrating to see the SEC drag their feet. This past week, expert discovery wrapped up. The SEC had sought delays around that. And I mean, one of the ironies around this has been that Gary Gensler, the chair of the SEC, has been quoted as saying, justice delayed is justice denied, and then the SEC goes out and seeks delays. It's rare for a defendant against the SEC to be pushing to see things happen faster, but we think it's very clear that the SEC has overstepped. The SEC has taken what's called the Howey test, which is the test to determine if something's security, and they've really stretched it beyond recognition. So I'm hopeful and optimistic we'll see some decisions around some key elements that are before the court today that maybe within weeks. we'll see. I think the questions that that the court has been asking have been very thoughtful, and I'm hopeful that we'll get some clarity soon.
And you've described the SEC in the past as really picking winners, and the idea that XRP as a cryptocurrency has been taken off of exchanges like Coinbase. In some senses, investors have missed out and not been able to trade XRP on those exchanges. Ripple has also seen certain downsides. Is it fair to say that the SEC is picking winners when it comes to XRP or other cryptocurrencies?
Well, one of the things I loved about the executive order, there are a number of themes that we have been at least championing in the marketplace that we saw in that executive order. One of them was about the importance of a level playing field. And as you pointed out, a big part of that executive order was around U.S. competitiveness. And what we saw happen at the SEC is, picking winners and losers, saying, hey, we don't think ETH is a security, but we do think XRP is a security, despite a whole lot of similarities. So I think that with the executive order, I'm hopeful that we'll get some of that level playing field we have sought. It's certainly not the role for the federal government to pick winners and losers. I think I'm a supporter and believer in what's happening in the Ethereum ecosystem. There's different use cases. And again, the executive order calls out specific use cases, for example, around cross-border payments, where Ripple has been focused really since the beginning, and how XRP, the digital asset kind of native to our solution, can really solve a lot of problems and benefit many consumers and businesses here in the United States.
Before we go, former SEC Commissioner Jay Clayton joined Squawk Box to talk about crypto regulation.
So obviously, I think he hit it on the head, and I love how he kind of viewed the positives out of it. Obviously, the executive order of the update that we have didn't really say anything too specific to, the digital assets. But just the fact that he can pull out the positives that came out of it just shows that, hey, we are kind of starting to take baby steps towards what we all want within our space. And the overwhelming goal is regulatory clarity, so these blockchain companies, these digital assets, can do things right by the book, so they can, continue to expand and grow their specific utility, so they can fight the good fight and solve a real world problem, which is massive. And that's all we want. Level the playing field. Let us know what they're supposed to do, what they can't do, so they can, progress on. This space can flourish. That's all we want. So I wanted to touch on some positives. I wanted to touch on this here. This from Cointelegraph says, report Axie Infinity accounted for nearly 2/3 of blockchain game NFT transactions in 2021. So obviously we know when it comes to crypto gaming, blockchain gaming, and NFTs, massive industry, and it's super early, but this has a lot of eyes on it from the mainstream. So I wanted to cover this. It says, in a second and third place were Sports Highlights Marketplace, NBA Top Shot with 827 million, and community gaming platform Loot with 242 million. So it says, according to a recent report curated by Non-Fungible, players of the Monster Battle Non-Fungible Tokens, or NFTs, game Axie Infinity transacted nearly 3.5 billion worth of NFTs in 2021. That's 1 year. That's absolutely massive. And it's so early within this space, in this sector, within the crypto space. It says this accounts for almost 2/3 of all NFT transactions in the entire blockchain gaming industry in 2021. And then obviously they said second place being the NBA Top Shot, and second being the platform Loot. So this is a huge positivity in this space, and this specific sector within the crypto space is going to be massive. There's a lot of users within this. Some more positives from Blackworks. It says, in the last 24 hours, U.S. wants to lead crypto innovation. So we just heard Brad House kind of touch on that. Is leveling the playing field and making sure that all parties, not just the U.S. but internationally, we're all on the same page in regards of regulations and how things are supposed to be done. It says Dubai creates crypto legal framework. South Korea elects a pro-crypto president. A lot of positivity right here. Coming over, here's some more. Just saying, global payments giant Stripe now supports payments in Bitcoin and crypto. See, the dominoes have already started falling. It's just about more momentum, and it's going to continue to keep knocking over the next domino, next domino. Adoption is happening day by day. People are seeing the writing on the wall with the crypto space, and especially with the executive order update that we see, we know that crypto is here to stay. Here's another one that says, breaking, Goldman Sachs is exploring offering Bitcoin and crypto directly to clients. The giant financial service firm is exploring offering over-the-counter bilateral crypto options. More access to more users, more exposure. This is huge. And then we got this one. Partnerships in 2022. Stripe and FTX, Visa and Consensus, State Street, Copper, GameStop, Immutable, MasterCard, Coinbase, BY Mellon, Chain Analysis. So, I mean, there's so much more, but this is just some positive components within the space right now that I wanted to update. And Blockwork always, ends up posting some great updates on kind of a lot of the positivity and adoption that's happening within the space. So obviously we know we have, inflation, CPI, updates. We have next week, we have Jerome Powell. Let me go ahead and pull that up real quick. Actually, we have FOMC meetings. Let me see if I can get this in here right. Right here. So, yep, March 15th and 16th. So that's our next meeting when it comes to interest rate hikes and see what their plan's going to be. And then we have, after March 15th, 16th, we have 1, 2, 3, 4, 5, 6 more. So if they continue to raise interest rates, 25 basis points each time, I mean, what's that, 1%, 1.25% or something, which is a lot, but who knows what they're going to do. Maybe they may take a dovish approach. Who knows? But I think based on the research I've seen, the market's starting to price that in. And obviously, with us being in this range and, us having some down days and blood in the streets, who knows where things are going to be. But there's so much positivity going on in the space, and you just know that we are so early. Okay. I know that's kind of redundant to say, it's kind of annoying to hear, but I kind of got to tell myself that as well. I've been investing since 2017, so I've been through the ebbs and flows of a market cycle. Being a huge investor in XRP, I've literally been part of that community that's been scrutinized and hated the most in the entire space. So I get your pain, but just know we are truly early. Okay, just remind yourself that. With all that being said, stay strong out there, be safe.